You're listening to the Tax Problem Solver. All right, here's some more questions that we've recently received. Why should I hire you? Can't I take care of this by myself? How about my current accountant? Can he or she handle it? Well, the reason you should hire us is what brought you to us in the first place, or brought you to this problem, is trying to take care of it by yourself, or not taking care of it by yourself. You've probably gotten a lot of mail that you haven't opened, certified letters that you haven't opened. That's caused the IRS to file tax liens, bank levies, wage garnishments. So you taking care of it is probably not going to get anywhere. It's the same thing. If you were arrested and charged with murder, would you represent yourself, or would you try to find the best attorney out there, regardless of the cost? Because you're talking about your freedom. Here you're talking about your financial life and your quality of life. You need brain surgery. You want to operate on yourself. And as far as your current accountant handling it, well, have you talked to them about this? Do they have the experience or the expertise to handle this? So you need to find that out. And if you gotten to the point where you're just really up against it and they haven't been able to help you yet, they're not going to be able to help you when it really gets you into dire circumstances. And if you haven't talked to your current accountant, why? Is it because you don't think he or she can handle it? So you need to talk to somebody like us. We are certified public accountants and certified tax resolution specialists. Being a certified tax resolution specialist means we have extensive advanced training in helping clients that have these tax issues, whether it's unfiled returns or unpaid returns, no matter what the issue is. We have the extensive training to help you. We have to take a continuing education specific towards this field of study. As a CPA, we have to take approximately an average of 40 hours a year of continuing education. But to be a certified tax resolution specialist, we need experience in doing this work. We need to take and pass an exam, and we need continuing education in this field of study. I think the continuing education just for this is 24 hours a year. And in October, next month, I'm going to be in Las Vegas for the Super Advanced Conference, where I'll be getting, I guess, about 20 hours of education. It's all day Thursday and Friday until about 1 o'clock on Saturday. I went to the Academy in Baltimore in June. That was all day Thursday and Friday. No, that was 2 days. That was all day Wednesday and Thursday. I'm sorry. So that was 16 hours. So this year I'll probably wind up with about 36 hours of continuing education just in this area, plus webinars that we take. Usually one a month I'm on. So, I could wind up with well over 40 hours just with this. And then I take my other 40 hours. This counts against the other 40 hours, but I also take accounting and other tax preparation stuff, not tax resolution continuing ed. So that's why you should hire somebody like us. And again, to give us a call, toll free, somebody's there to take your call 24 hours a day, 877-257-1040. Email address is ckm@taxproblemsolved.com, and my website is www.taxproblemsolved.com. All right, now, how do I know what the IRS says I owe is correct? We get that all the time. The IRS is billing people, and how do we know it's correct? Well, you could get a transcript from the IRS. I doubt if you would know how to read it. You can give it to us, or you could give us a power of attorney, and we can get a transcript from the IRS. Many times we can get that transcript the same day, and we review it, and we see that the tax that was posted, it matches your tax return, and we look at all the penalties and interest that were added. There's software that we use that will recalculate the penalties and interest and make sure the IRS calculated the proper penalty and the proper interest. Sometimes they make mistakes. We're all human, they're human. And The other thing that we do is we always want to review your tax return for those years to see if the tax return was prepared correctly. If it wasn't, and it's showing that you owe more than you should, we can amend that return and reduce your tax liability. That will reduce your penalties and reduce your interest. And maybe now you can afford to write that check. So we want to look at that. If the return is older than 3 years, we can still amend it if the tax has not been paid. The rule for amending a tax return is you can amend the last 3 years, not the last 3 returns that you filed, the last 3 years. So, you may have filed 2012 6 months ago, and that's not the last 3 years. The last 3 years are 16, 17, and 18. And you have 2 years from the date it was filed or the tax was finally paid in full to amend a return. So if you owe money for 2012 in my example, and that return was incorrect, and it's showing that you owed $10,000 and you really only owed 6 because some deductions were not in there or a mistake was made, we can amend that return and bring that 10 down to 6, lower your tax balance by $4,000, lower your penalties and interest, and now maybe it's something that's affordable for you. So we do that quite a bit also. So now, I owe the IRS but can't pay it all. Can I get payments with them? Can I pay them over time? Sure you can. There's different ways of doing that. There's an installment agreement. There's partial pay installment agreements. There's streamlined payment plans. And what we do is look to try and get you the minimum payment that they will accept that you can afford. Now, the streamlined payment plan we can do without giving financial information. And why do we want to do that? Because you might be able to pay them $300 over a period of time, and that'll pay the tax in full. But if we give them financial information, it may show that your ability to pay is $400 or $500, because not everything you spend money on is going to be allowed into a payment plan. You might go out to dinner every night of the week. Well, the IRS is not going to fund that lifestyle. You might go to Capital Grill, every week. The IRS is not going to fund that lifestyle. You may drive a Lamborghini or a Mercedes or a very expensive car. The IRS is not going to fund that lifestyle. So you need to have reasonable expectations. You may have to cut back on your lifestyle. So if that financial disclosure form shows that you can afford to pay $500, the IRS is going to want that $500. And the only way you're going to pay that $500 is to change your lifestyle. You may not want to change your lifestyle. Your spouse may not want to change his or her lifestyle. Your kids definitely not want to change their lifestyle and not go to summer camp and not, vacation in Cancun for 2 weeks in the winter, over Christmas, or, be able to go away over spring break, things like that. You're going to have to change your lifestyle. So we would do what we know you can afford, the $300 a month. I don't ever let my clients agree to a payment plan that they know they're not going to agree to pay. That $500, we all know you're not going to agree to pay because chances are you're not going to change your lifestyle. It's us. It's us. We're not going to do that. So rather than commit you to it, when we know you're going to default, we just go with the streamline. And if this month you can send them $500, great, send them $500. Next month, you send them $400. The next 8 months, you send them $300. That's fine. We want to make it a plan that you can afford to pay every single month without having a problem. So that's why we try to do the lowest possible payment to take care of that tax bill. They will still keep any tax refunds that you have going forward, and that's okay. We can also fix that by changing your withholding so you have less tax withheld. So instead of getting a $5,000 refund that they're going to keep, we change your withholding by $5,000 by $100 a week. So at the end of the year, when you file your tax return, maybe you owe them a couple $100 or they owe you a couple $100, but that's okay. But that $100 a week that we're changing, you're putting that in the bank, hopefully. Hopefully you're putting that in the bank, or you're using it to pay down other debt, or if you're using that money for your vacation, that $5,000 refund, you buy a $100 a week vacation club. I think the banks still have Christmas clubs and vacation clubs, so you can still do that. Or open up an online account with a Capital One type bank where everything is done online, where you don't have a debit card. You can't just go to the local ATM machine and pull that money out that you've been saving, or you can't just walk into the bank and cash a check. With these online accounts, look for the one that will pay the highest interest rate, put it with them, because when you need money or want money, you have to go online and you have to do something. So that's something different that you're doing rather than just pulling up to the drive-in ATM. They make it very convenient for us. So the other thing that you have to do is you fill it out, you have it transferred to your bank, and it might take 2 or 3 days. I don't know. I have not done it. I used to have a Capital One account where if I wanted to transfer money, it took about 3 days to get it back into my checking account. Well, you thought twice before you went and got the money. You know, you're not going to get instant gratification. You're not going to use a debit card at Home Depot to buy that new power saw. I say that because I do woodworking. So if I want something, I want to buy a new power saw. I want to buy, you know, a new drill, a new joiner, planer. I golf. I want to buy new golf clubs. I fish. I want to buy a new fishing rod or something. Waders. I fly fish. I want to get a new pair of waders. So, you know, we can't get that instant gratification. So, another one is if the IRS files a lien against me, will it affect my credit score? The answer to that is very simply yes. Lien is filed against you. It's filed with the county clerk's office in New Jersey. Pennsylvania is the prothonotary's office. And whatever state you're living in, that's where it's filed. The credit bureaus pick up on it and will probably lower your credit score by 200 or 300 points. You're not going to get a credit card. You're not going to get a car loan with 1.9% interest rate. You're not going to get a low mortgage rate or a low rate to refinance your house or a home equity loan. You can still get credit, but it's going to cost you. That 1.9 car loan that your brother is getting might cost you 8 or 9% because of the tax lien. Or you're going to have to put, you know, on a $30,000 car, you might have to put $7,000 or $8,000 down in equity. You can't finance the whole thing. And that's the price you pay for having the tax lien and not having taken care of it, not having opened your mail to prevent that tax lien. I'm always stressing about opening your mail. So then when everything is squared away, we can get the tax lien released. That'll increase your credit score a little bit, but then we file to get it withdrawn. And a withdrawal is a big eraser. It's like going into the filing cabinet and taking a piece of paper out of the file and shredding it. It's like it never existed. Your credit score will go back up to where it was. You lost 300, you'll get 300 points back. Then you'll be able to get that 1.9 car loan.